Okay, I tried to answer some of your questions on the break that were pertinent to where we were. Coke, very nice statement. Thank you. He had an aha moment last night. That's the whole point, man. Okay, here we go. I want you to learn to capture 50 pips, and right now, not one pip more. You're going to be able to add contracts, man. Greed kills all good traders. Here's what I want you to think about for a minute. If you accidentally get jammed up in the stop hunt, you should still be able to book a profit going the wrong way if you aim for 50. Okay? So if you learn to not be too selfish or crazy or greedy or whatever the right word is, and learn to extract 50 pips consistently out of the market, even if you trade the wrong directional bias, you got a shot at hitting your limit. I can tell you that Zen is an excellent trader. But like all men, we got to get more, right? It's the testosterone. We got to beat these guys and beat the hell out of them, get more and more and more. And he struggled with this when I first taught him about a year and a half ago. He insisted on trying to lift his take profit and go for more, and I told him why. A lot of times when he lifted it, he would end up with plus 30 or 35 because they would make the retracement on him, and he would be damn it and take his 35 pips off. When he locked in his mind, the take profit needs to be a fixed target, and he'll be in and out in 3 to 5 bars. When they shift the zone and start pulling away, he'll hit his limit and just start using contracts to compensate for the extra pips. His trading turned around completely, and he's now, I can't say he's the master because I think I am, so he has to be the junior master. Anyway, greed kills all good traders, and everybody goes through that phase of where they feel like they can get more and more and more. Don't forget why you got in this business. Time, freedom, and leverage. Use that to your advantage to extract your 50 pips like a master without fail, and add 5 lots or 10 lots or 80 lots when you become proficient. If you know that you're going to hit 8 out of 10, the losers aren't going to bother you because you know you'll get it right back and end the week net profit, net positive. I want you to learn to take only crystal clear setups. Whatever that means to you. I went through this with Lauren last year. I wanted her to pick her signature. And I don't know if she ever did. I can't remember. She sent me an email a while back. She liked 2 pins to the mayonnaise. That was her deal. If you get a stop hunt at 3:30 in the morning and they hit right to the mayonnaise and they issue a pin or a hammer right on the mayonnaise, that's a nice setup. That's going to pay out. That's going to bounce off of the 200 EMA. I'll explain to you why in a little bit. But what you need to do is find what it is that makes you feel all gooey inside. Like, wow, I see that 2 pins in the mayonnaise. I see a W on the 4-hour. I see 3 swipes at the low. When you establish that and become comfortable with it, I want you to focus your homework on that. If you say, Steve, you know what? I'm going to take 3 vector candles to the low, second leg, and I'm going to grab my 50 and be out. Then you need to focus your homework on finding those trades and see how often they pan out. If you decide you're going to focus on multi-session big W spread out over a day or two, and then convert the spot trade to a swing and hold it for 2.5 to 3 day cycle, 200 EMA, my friend. Mayonnaise is 200 EMA. I'll cover it, don't worry. If you catch the midweek reversal or the big W formation over 2 sessions, that's the kind of trade you can hold. If you want a swing trade, obviously you got to hold for more than 50 pips. But when you're learning, if you can't make 50 pips, how are you going to make 250 pips? It comes with time. It's a process. The biggest problem most of you are going to have is flushing the crap out of your head. I don't know how to do that. The old technicals. Coke wrote me a little something on the break that he was hanging out with some of his friends, and they took the wrong directional move based on old technicals, and he said he felt bad because they were going the wrong way, and he knew it. He saw the market through a market maker's eyes or through our eyes as a group and realized those guys are going the wrong way, man. Sorry about their luck. Anyway, that's the stuff I want you to understand, is that if you see the perfect setup, you can take 50 contracts without fear of loss. If you're trading a 6 out of 10 system and you're not that good at a 6 out of 10 system, how in the heck are you ever going to put those kind of numbers on comfortably without fear? Okay? But I want you to understand that if you say, I'm going to take multi-session M's and W's, you go back and look how many times those things pay out 50 pips. Almost always. And you're going to see that the ones that don't hold consolidation and scratch out. When you realize that, which comes from time, screen time, and doing the homework and seeing them, when you realize that, you're going to not be afraid to put 10 standards on there. I'm not telling you to take 10 standards tomorrow. I'm telling you to start small, grow your account, and get yourself into a position where you can take comfortably 2 to 5 trades a week, 1 a day, of the most pristine, perfect setups that will yield you what you need to make to pay your bills and be comfortable. Everybody's different. If you live in New York, you've got to have like 500 trades a week. If you live in Nebraska, you probably got to have 2 trades a week. Depends on your lifestyle. But it's all obtainable here by understanding how these guys behave and controlling your emotions and your greed in the process. Okay? All right. Why 50 pips, Steve? I want to go for 500 pips. Okay. You are not going to deal from the absolute bottom or the absolute top. So let's take 10 to 15 pips off of that number of the move, right? You got to include the spread and slippage that these guys do. That's the business. The bigger your contract size is, the more you'll start to see it. Let's add 5 for slippage and the spread. You got a 2-pip spread, they slip you a pip 3. It's a lot of money with a lot of standard lots on. We all know that all 3 levels are not going to appear every day on the chart. So that limits you to what's going to be available to take. So if you average level 1 and level 2 from the peak formation to the high-low day consolidation zone, you got about 70 pips available to you if you have a tight ADR for the day. You can easily grab your 50 pips out of that float and grab most of what was available for all the other traders and come out way ahead of the curve. The bottom line is this. I don't know if DJ's in here, but he wasn't seeing the pattern so clearly. But because the stop losses are so tight when you get in near the low or near the high, 7, 10, 15 pip stop losses. I don't say that in public because people think I'm nuts. Hey, Doug, nice to see you, buddy. I hope I'm not embarrassing you saying this, but he had a bad week where he had more losers than winners. But because the stops were so tight and he was taking 50 out of the market at will, he was net profitable. I want his numbers to be better. But the bottom line, while he's training and learning, he's still making money. Because he's getting in close to the numbers. Sometimes he's wrong and he hits a stop, but it's 10, 15 pips and he goes again. He can have 2 or 3 stops. And when he hits one, he gets it all back for 50 pips. It's called controlling your losses and your emotions. Hey, Zaim, if you understand what's going on and how they structure the stop loss levels and how they hit it, you can come right back at them. I once heard, in a school somewhere, I don't want to say the name, they said if you get stopped out, to go on vacation. And they really meant it. You do not want to be on vacation with me if I just got stopped out. What fun is that going to be? What I want you to understand is that when you analyze the market conditions and you get stopped out, if you walk away and come back the same time tomorrow, you could fall right into the same conditions. If you get stopped out, anyone want to take a stab at how long you wait? 2 hours. Why? If they go vector 3 again, 3 bars takes 45 minutes. If they spike the low and go back into consolidation, that will take another hour or so to set up that structure. If they spike the low again, that's another 15 to 30 minutes. There's your 2-hour time window for re-entry. The structure must be 25 to 50 pips above or below your previous entry. If they hold the level and pass a third time, and it still is also 2 hours, and they might have snapped you out with a pin and closed below or above that structure, that is still a good entry. I'll draw it for you, don't worry, I just want you to listen. Okay? So if you take a trade right out of the London box and they vector down, it looks like the W to you, and they hit your stop, you don't walk away. That's what amateurs do. You analyze the market condition, wait for the next level stop hunt and strike zone, and you strike. These guys vary the levels to keep you confused. There might be a 4-hour line laying down there. They might come out, hold the level, and then go, there's the 4-hour, bam, and go get it. That might cause you to get stopped out. Control your stop and enter on the next strike zone 25 to 50 pips below where you just were. And I'll illustrate this. I just want you to hear it. I'm trying to give you the concepts for the next couple of days. You have to listen. Don't worry about the charts. Don't worry about your indicators. Don't worry about stuff you cannot see. It's irrelevant right now. I'm trying to get you inside the head of these guys, the mind of a market maker, and understand how he handles the market. This knowledge by itself is invaluable. Don't worry about the chart stuff. We'll straighten it out, I promise. Okay? If you listen to the rules I just laid out for you and wrote them down, there's a good chance you will hit your limit every single day. Or every time you take a trade, if you wait and exercise patience. The thing that's kind of crazy is you can trade both ways against the trend and against the retail trend. So that means you have an opportunity to book profit in both sessions from both ends of the range. You can take a short off the M and a long off the W on the extremes of the range and be profitable both trades. And book yourself 75 to 100 pips consistently. 50 on the first trend move, 25 to 50 on the counter. Going against the retail traders. Market makers trade both ways every day. Why would you have fear to follow them and trade both ways? You can average 100 pips a day doing it this way. Combination of pairs, let's say you take Euro, GBP, CHF, you bag 50 in the London session on all three pairs, that's $1.50 times your contracts. Then you can take the counter in one or two pairs back to the watermark on the ideal level 3 drop setup W back to the watermark. Another 40 to 50 pips. Or until the pair comes to rest into consolidation. Understand the extremes of the zone. A sucker trades in the middle and offers up your stop loss for these guys. Learn to be selective on the extremes of the range. If you're only studying one pair, that's perfect. Sunny, I don't know if she's here. She told me she got so profitable she ain't wasting her time taking my seminars anymore. I don't know if I should be proud or insulted. She focuses on Euro USD. She took about a $500 account to $8,000 plus in a few months. Focusing on only Euro USD and trading both sides of the range, understanding their behaviors, and mastering that pair. Trent, I don't know if he's here, has been chasing the pound USD for years. It was driving him crazy. When I gave him the last piece of the puzzle, he beats the crap out of the pound on a regular basis for multi-five figures a day or in a couple of days. By the way, you're probably going like 5 figures. What is that? Not 5 figures a year, 5 figures a week or a couple of days. Okay? That's the power of understanding what these guys do. I want you to understand that. Once you